when you sat on the panel, we spoke a little bit about the interest that Chinese buyers are having in the European market and the German market specifically. Over the last couple of years, we've seen a lot of interest, but that hasn't necessarily translated in an ability to close deals.
Yeah.
How has that changed now, and why has it changed?
Yeah, well, if you're looking at a broad auction process and they're up against private equity players or Western players that really want to get hold of that asset,
yeah,
we will always see the Western player making it to the finish line quicker.
Yeah.
So if we say in 10 processes where a Chinese player participate, in 8 they will lose out against the Western competition. So it doesn't really mean that they're not interested. It just means that it takes them a bit longer to get to the finish line, and in structured auction processes, the Western players are a bit quicker and therefore a bit more lucky to make it to the finish line.
So what's changed now? Why are they now able to close these deals and close quite significant deals? I mean, if you think about the Putzmeister transaction, for example, I mean, that is, if you think about it, a privately held Mittelstand company, classic German industrial, really. We know that loads of private equity funds are interested in specifically an asset like that, and then in sweeps a Chinese buyer and is able to close a deal like that. Why all of a sudden?
Yeah, in some of these processes that have been successful from a Chinese perspective, they've been in one-on-one situations.
Okay.
And in other situations, they were just difficult assets.
Mm-hmm.
If you look at the Volvo situation,
yeah,
Land Rover, Jaguar, T&D Friction, all of them have been to a certain extent a bit difficult assets, and therefore they've been successful, especially in one-on-one situations and more difficult assets.
And difficult assets in the sense of that they're possibly a company that's under pressure, that's under distress, but it has fundamentally technology that is really interesting for a Chinese player.
That is right, and some of them have a history of, especially during the financial crisis, of underperforming in terms of financial performance. So the difficult means current financial performance, recent financial performance, so all these things.
Okay, what does that mean for local private equity funds, for bulge bracket private equity funds and trade players? Is it going to be even more difficult to compete? Because obviously if you have in many cases the Chinese state-owned business with huge amounts of funds, financially they'll be very easily to be outbid.
Yeah. The competition increases from China, but here again, if you're running a broad auction process, Chinese will find it difficult to compete against the Western players because they're still a bit slower. Mm-hmm. The decision-making process internally takes longer. All the documentation needs to be translated into Mandarin, etc. And then there's always that final risk for a seller. If you're selling to a Chinese player, the condition precedent in the contract will not only be cartel approval, the condition precedent will also be government approval.
Okay.
So there's an additional layer of uncertainty.